There are three reasons for the precipitous fall in international oil prices. The first reason is that Saudi Arabia wants to maintain its market share in the international oil market. And they're losing it to people who are using new technology to tap oil, especially the Americans who use hydraulic fracturing or fracking in North Carolina and Dakota shale oil fields. It wants to chase them out of the market because they have made America self-sufficient in oil. So that market, US market, Saudi Arabia has already lost. So that's one reason. The second reason is the slowdown in the global economy and the slowdown in the Chinese economy in particular. Although the overall volume of oil that China imports has not gone down, but it's not going to increase at a rate that it had been in the past. So that's the second reason. The third reason is geopolitical. The traditional rival of Saudi Arabia is Iran. Iran up to now was under sanctions, could not export oil. Its economy was suffering. Now with the US-Iran nuclear deal, Iran will bring in upwards of 600,000 barrels of oil per day into the market. They need a good price for that oil if they want to rebuild their economy. However, they're being denied that by their traditional rival Saudi Arabia by keeping prices low by overproducing. Well, that's a difficult question because there is no bottom that can be defined as of now. But there are observers who say that Saudi Arabia can take the oil price down to $10 to $15 per barrel. However, this will have consequences for Saudi Arabia also. Already, their budget is in deficit this year. Saudi Arabia's budget is premised on oil price being at $100 per barrel. This year, the budgetary deficit will be 20% of their GDP. The IMF has warned that if the current policies of Saudi Arabia continue vis-a-vis oil production, then in 5 years, their foreign exchange reserves will disappear. Already, the consequences are being felt by Saudi Arabia. They've cut down on infrastructure projects. They've cut down on energy subsidies. Now, there was a compact between the Saudi Arabian rulers and the public. They virtually bought their loyalty by subsidizing their living expenses hugely through energy subsidies. If these energy subsidies disappear, there could be unrest in Saudi Arabia. OPEC has been under pressure from several oil-producing countries, especially the petronations of Latin America and Iran, to cut down on production and stabilize prices. However, OPEC is dominated by Saudi Arabia, the United Arab Emirates, and the Gulf countries. So whatever Saudi Arabia says, others follow their lead. So OPEC cannot generate consensus on cutting down on oil production. If Saudi Arabia and the Gulf countries don't cut down their oil production, others are also unlikely to do so. For example, Iraq, which has entered the energy market after stabilization only a couple of years ago, has doubled its production in 2014. Iran, as I told you earlier, is to bring in upwards of 600,000 barrels of oil per day into the market if it wants to rebuild its economy. But it needs a decent price for that oil, which is being denied to it by Saudi Arabia and its allies in the Gulf by overproducing and by keeping the price low. Well, the oil prices can stabilize or go up only under three conditions. One, if there is a war between two or more major oil-producing nations. People talk of a possibility of a conflict between Iran and Saudi Arabia, but I think that's unlikely. I don't think Saudi Arabia will push its policy of beggar thy neighbor to such an extent that there would be a war. So that scenario is out. And the second scenario in which oil prices can stabilize is if the world economy recovers, there's a spurt in growth overall, and the demand for oil goes up. Because now there's a glut of oil, too much oil and too little demand. But economies the world over are not looking up, so that's also unlikely to happen. The third scenario under which oil prices can stabilize at a higher level is if Saudi Arabia cuts production. I think that's the most likely scenario in the short to medium run. Well, the petronations of Latin America lose, Iran loses, and Russia loses in a big way. So do Saudi Arabia and the Gulf countries, but they can sustain these losses. Saudi Arabia's oil wells are old oil wells. They don't require new investment. They have huge reserves of foreign exchange. So it's really the Latin American countries, Iran and Russia, and some of the countries of Central Asia which produce oil. They are likely to suffer the most. Now, oil and oil revenues continue to play an important role in geopolitics. So to that extent, these countries which used to influence geopolitics in the region and elsewhere, their influence will be eroded to some extent. Because if money buys influence and power, if that money goes down because of falling oil revenues, your geopolitical influence will also go down. Who benefits? The net oil importers of the world benefit. Countries like India benefit. But is that benefit a long-term benefit at a time when the economies of the world are not growing? I doubt it very much. In the short run, these people can capitalize on these benefits by balancing their budgets, cutting down on their deficit, and by investing in infrastructure.